$1,000 sitting in your bank account right now is losing money. Not slowly, not eventually. Right now, today, while it just sits there.
Honey, this is
That's not a scare tactic. That's just what inflation does to idle cash. And yet most people,
You've got to be kidding me.
time they save $1,000, do exactly.
Every morning, Wall Street wakes up to a digital flood of data. Here, mere seconds separate absolute triumph from total failure.
Exactly one thing with it, nothing. They let it sit. Because investing feels complicated, risky, and built for people who already understand it. Here's the part nobody tells you early enough. You don't need to understand everything to start. You need to understand just enough to not make an expensive mistake. That's what the next few minutes are for. Let's set the stage. Why does this moment, your first $1,000, actually matter? Because of something almost boring on the surface. Time.
Investing in your
Money invested early doesn't just grow. It grows on its own growth. That's compounding. $1,000 invested in your 20s has decades to multiply quietly in the background while you're doing literally anything else with your life. The same $1,000 invested in your 40s has far less runway to do that same work. The amount doesn't change. The time does. And time is the one variable you can never buy back later. So now the real question, what do you actually do with it? Strip away the noise, and investing options basically break into 3 buckets: ownership, lending, and cash-like safety. When you buy a stock, you're not gambling on a number going up. You're buying a tiny sliver of ownership in an actual business. Its profits, its future, its risk. When you buy a bond, you're doing the opposite. You're lending money to a government or company, and they pay you interest for the privilege. And cash-like options, savings accounts, money market funds are where safety lives at the cost of growth. Most beginner mistakes happen because people pick from these buckets based on emotion instead of understanding the mechanism. Here's the part that gets uncomfortably real. A lot of people's first investing experience isn't a slow, boring index fund. It's a hot stock tip from a friend or an app that gamifies trading with confetti animations when you make a trade. That's not an accident. Trading apps make more money when you trade more often, not when you make good long-term decisions. The app's incentive and your financial interest are not the same thing. Nobody tells you that part. Meanwhile, the boring option, a diversified index fund, something that simply owns a small piece of hundreds of companies at once, historically outperforms most people who try to pick individual winners themselves. Not because it's exciting, because it removes the 2 things that quietly destroy new investors: overconfidence and panic selling.
Look at this chart.
That's the contrast worth sitting with. The version of investing that looks thrilling on social media is usually the version most likely to lose you money. The version that looks almost too simple to matter is usually the one doing the actual work. Now zoom out. $1,000 won't change your life by itself. That's true. But it's not really about the $1,000. It's about becoming someone who understands what money does when it's put to work instead of left idle. The habits, the instincts, the patience you build managing your first $1,000 are the same ones that will manage your 50th $1,000 and your 500th. The risk isn't losing this specific amount. The risk is delaying the starting point. Because every year you wait is a year of compounding you can never get back, no matter how much money you eventually have. So here's the question worth leaving you with. If time matters more than the amount you start with, Why do so many people wait until they have more money to finally begin?
True wealth begins with a single seed, nurtured by patience and a clear vision.
Starting early made all the difference. Consistency was the real key, and our investments grew with us. Now it's time to enjoy the future.
True wealth isn't built overnight. It's the result of steady, disciplined growth, measured in years.
Thank you for watching the full video. If you enjoyed it, please subscribe to the channel so you don't miss the next one.